A very good evening to all our mentorship traders. This is Friday evening, 9 to 10 p.m. Mentorship Invest Meet, 9th of April, 9 p.m. Indian Standard Time, Friday evening. We will talk about the markets and how the various sectoral indices played out this week and what can we expect going forward next week. And after that, like always, we discuss investment or positional opportunities, the ones that we took last week, how did they play out this week and what should we do about them, and what are the new picks for the coming week ahead. But first things first, we will talk about Nifty. Now, let's blow out this and go to the weekly charts first. We've got I can get done with this. Yeah, we have a range bound market on the weekly time frame. Let's talk about a medium term to a slightly longer time frame markets. It's stuck in a range. I've been writing this in our warm-up emailers saying that it's been 2 months and the index has not gone anywhere. It's just trading in terms of time than in terms of price, which is okay, because if you look at the kind of movement we've had since 23rd of March last year, this kind of a consolidation or a breather or a stoppage is okay. We should allow it. We had a great run. So the long-term charts are tired buying time, which means that the shorter time frame charts will go volatile. That's exactly very clearly seen from this daily charts. We don't have a trending market either on the upside or on the downside. It's more like a trader's market. Buy and hold or positional trades wouldn't have fetched the kind of returns that they did over the last years or so. So this is the norm. That is how it is. Accept it and trade and take positions accordingly. Once this underlying dynamics of the market changes and it starts to trend either up or down, we will change our stance accordingly. But as of now, we are in a market condition wherein the short-term trend, which we have seen multiple times over the last, just 1 minute. Let me open the 75-minute charts for you. Over the last 2 months have been extremely volatile and it has led to multiple reversals. We use the RSI 9, the moving averages to come to a conclusion about the underlying trend, and we've seen how many times it has just reversed. So be it, we are okay with it. So what is the status from a short-term perspective? From a short-term perspective, we had a trend reversal soon, and after that we had this sharp sell-off and then an equally sharper bounce back. And so right now we are in a nascent short-term uptrend. Strategically, we should be cautiously bullish. Number one, it's got a pretty good zone of support close to that 14,800 and a little below that 14,800 mark. I've put in some volume at price in terms of this rally and this fall, and I can clearly see a chunk of volumes have happened close to that 14,800. So you can take 50, 100 points up and down from 14,800, and we've got a majority chunk of volumes happening in this zone. So from a short-term perspective, 14,800 definitely is the support. I've got some colorful channels over here, out of which the short-term one is this rising green one. From a very, very short-term perspective, talking about Monday's trade, a move about 14,920 and all, we can see some move towards the higher of this channel. If it drops further down, is this red falling channel, which is a beautiful channel which held this movement, break out from the channel, comes down to the channel and bounces back. So this channel will act as support if market continues to move back into a downtrend. But looking at the price behavior of the Nifty, it did yet again test the psychological 15K mark, number one. So the bulls are not willing to give away that easily. Number two, it again failed to close above it and sustain above it. So bears are also not willing to let go of that so easily. So it's going to be a tug of war. It's going to be difficult. It's going to be volatile, and we'll have to act accordingly. We have to be very stock specific, and probably be a little lighter in terms of our bet sizing. Now, let's take a look at the behavior of the sectors. I am using the RRG chart format on the stockcharts.com platform. I'm going to reduce it to 1 week and first take a look about how it played out for us. Metals, of course, we've seen JSW, Tata Steel, SAIL, all of them extended move on the upside. IT supported the index really well on the day when the market cracked very hard. So did pharma. Small cap, mid caps have been very, very consistent. We've got some movement coming in from FMCG and consumer durables, the way Hindustan Unilever and other stocks have moved. So we can see that in this space, amongst the greens, if you allow me to annotate this, in this space, wherein we have the sectoral positive gainers, we do see some pockets of defensive plays like pharma, FMCG, consumer durables. We've got IT. So these are the sectors which perform well when the markets are looking a little risky. But then we have the metals. So it's a different kind of a market. And when you look down, and we've been talking about it, that the banks and the financial services can act a drag because the trend is still down, and that's exactly how it has played out. The bank Nifty is the biggest sectoral loser, and that's most of it. The chunk of it has come from the private banks. In fact, in today's trade, if you notice, public sector banks were positive, private sector banks were negative, and that's why the PSU banking space is not damaged as much as the private sector. So it's the private sector stocks which needs a very close watch going forward. The bank Nifty bounce back will come from the private sector banks, HDFC Bank, Kotak Bank, ICICI Bank, Axis Bank. Keep a close eye on them. So well divided market. If you look at the performance, the sectoral performance, I would say 50% of the sector is positive and the other 50% negative. The only point is the other 50% which is negative, we have the banking and financials which has a very, very high weightage. So the damage is coming from that pocket which enjoys a maximum weightage. As we always do, we take a look at the RRG graph from a 3-month perspective. So dragging it to 12 weeks and updating it. Let's update this. Right, and let's fit it. So there you go. Let's sort them in terms of the tail first, and we see that the PSU banks right up there in terms of strength and momentum. The metals right up there just went for the weakening and then just bounced back. So that strength is very much there. The public sector enterprises also, we've spoken about this, I think, last week or the week before. The PSE space is definitely worth keeping a close watch at. It's up 4% over the last 3 months. I think there's some definite headrooms from this public sector enterprises, not only banks, but across all the industries. The mid and small cap is there. It's been very, very consistent, and few infrastructure. Now, FMCG back to improving, and where's consumer durables? Now, consumer durables is still not, it's still hanging on that lagging. So we've been talking about FMCG. This is primarily come from, I think, Hindustan Unilever, the way the stock has moved. Energy, we've spoken about Reliance, we've spoken about oil marketing companies. We spoke that in energy will be in very, very interesting stock to keep a close watch at. In fact, we spoke about energy, and we did take a look at all the energy stocks last Friday when we did this session. And we also spoke about Reliance, how important the stock can be. Now, it did give us a move. If you remember, this was, I think, Wednesday's move. What a move it was towards that 2060 mark. And again, it disappoints. So the psychological 2K is playing out yet again for Reliance Industries. And I think going forward, it will surprise us with bounces like we saw on Wednesday. Primarily because if this has to play out, I think Reliance cannot shy off for long. So energy definitely will stay in our radar, especially OMCs and Reliance Industries. I would, before I go to the other sectors, Gas Authority of India Limited is doing all right. It's holding pretty well, and it's likely to give us a breakout. And you take a definitely look at stocks like MGL, IGL. IGL gave us a very nice move over the last 2 days. So this CNX energy play, from improving to leading, this space should perform. And we cannot think out of Reliance Industries if we talk about the oil and gas or the energy space. Now, banking is divided. If you look at today's, especially to today's move, private sector banks underperforming, public sector banks outperforming. This is not a common phenomenon. In fact, it's the other way around, that we are so used to seeing the private sector banks doing better. It seems like the market's paying a premium for anything which is owned by the state as of now. Pharma still in a lagging space, but it did move very well. I think it will go consolidate. It's not going to perform from here on any further. And then we have the IT. Now, IT, according to the RRG charts over the last 3 months, is showing the movement from the weakening towards the lagging space. But if you look at the constituents of the IT, especially Infosys, extremely strong uptrend and showing strength. Then we have the likes of TCS and Wipro, which has given a very sharp move. So this underperformance or the lagging thing, which is here for the last 3 months, that is because if you are a little confused, why is it showing so? It's because of this, because it's considering the last 3 months, and last 3 months the sectors, the stock has done not that great. It has been literally kind of range bound and now trying to break away from the range, and that is why if you see HCL Tech, you'll find the same phenomenon across the board. So that is why it is showing in the lagging space over the last 3 months. But if I drag it, if I make it probably lesser, it will improve. Nevertheless, IT would probably be an interesting space to keep a close watch, because from here on it can move to improving and leading. So this breakout that we've seen in Infosys, this outperformance that we've seen in Wipro, Tech Mahindra, I think can play out, especially on those days when the markets are a little soft. So wrapping it up before I let go is the Bank Nifty. We've not spoken about it. The Bank Nifty is back to the lower border of this channel now. This channel has been there for some time and it's playing out well. It has given us bounce back once, twice, multiple times. Is it trying to wash away the loose hands? Because as it makes lower lows, our momentum indicators are definitely improving. So it needs to be taken a very closer look at. The index is back to the highs of Jan 21. If you see these highs, if I drag it up here, so it's at very interesting supports. So Bank Nifty definitely plays a role. We'll keep a close eye on the Bank Nifty, especially the private sector banks. We can get a bounce back from stocks like iBank. Too early to comment on it right now, because as of now it's showing no strength. It is dragging the index down. For all we know that it is actually dragging the index down, but we might get some consolidation here sometime soon. Don't look to short them right now. Let's see how it plays out, and let's see whether the Nifty tries yet again for a retest of that psychological 15K mark or not. I would suggest to stay cautiously bullish. Don't go outward bearish, or don't go outward bullish either, but cautiously bullish and stocks specific approach, I think, should be the name of the game, even going forward in the next week. All right, I'll wrap up here and let's move ahead and talk about the investment picks that we chose last week and what are the ones we are looking at for the week ahead.